All right, guys, we'll start in a few seconds. Just want to make sure that everybody sees me and hears me. Someone say yay in the chat. Yes, I hear you. I see you. Wonderful. Thanks for the feedback. Okay, guys, let's go ahead and get started. So I'd like to welcome you to the Altfin's crypto trading education program. This is lesson 1. Well, we will cover some basics. We'll go over the platform and some of the features it offers. We'll cover some theory in basics and in practice, and we'll try to do a trade at the end of all of it, and maybe do some Q&A. I am Richard Fetchko, the founder of Altfins, and again, really appreciate you committing your time and resources to educating yourself about how to trade cryptocurrencies. We hope that this course and the platform can add some value to your trading workflow and process. Now, a little bit about myself. I spent majority of my career on Wall Street, working out of New York City in several investment banks and brokerage firms. I worked as an equity sell-side research analyst, which basically meant that I wrote research reports and I analyzed technology companies, and our clients were typically mutual funds, hedge funds, pension funds, family offices that wanted some advice on how to structure their portfolios, particularly in the technology sector. And I did that for about 14 years. And then the following 6 years, I helped a family fund for a high net worth individual based out of Slovakia who made his money in real estate, commercial real estate, and was diversifying his portfolio and wanted to have some help with basically investing and structuring a portfolio of publicly traded equities. So I helped with that process. And then really a few years ago, late 2017, 2018, when crypto really burst onto the scene, I kind of caught the bug. I began to trade and invest in cryptocurrencies myself, and quickly basically grew frustrated that I didn't have a robust tool for identifying interesting trading opportunities and monitoring my positions across multiple exchanges. The information is very fragmented in this space. Still, it's a very nascent space, as you know, and so I was used to certain tools such as Bloomberg and others to help me in the traditional finance world, and I lacked that here in the cryptocurrencies space. So I and a handful of developers decided to build a platform such as Altfins, and we're at the beginning of the journey. So I realized that there's still a lot of shortcomings and some bugs perhaps currently on the platform that we are fixing. We're running as fast as we can, but I appreciate the patience, and certainly report anything that you see that is not right or is a bug, or you think that we should add to the platform. Any kind of feedback, constructive feedback is welcome. Now, we realize that the platform is starting to get robust enough to where it's almost an overkill, and for some people, especially novice beginning traders, find it overwhelming, and technical analysis in general can be very intimidating, and there's a lot of theory, a lot of ways to skin the cat in a way. And so I think we realized that there was a need to kind of boil it down to just some foundational blocks and basics of trading in general, frankly, any asset. I mean, these skills you're going to learn here could be applied to equities, could be applied to Forex, commodities. The technical analysis theory really applies to any financial asset. And so we realized that there was a need for someone or for us to practically show and teach the technical analysis and help you basically identify some profitable or trading opportunities that have a high probability of success. I'm going to go through some of these notes, but initially, I would like to give you an overview of the platform. So let's go ahead and do that. Hopefully you see my screen with the platform. Again, just give me a quick, before I start rattling, just let me know that you do see the platform itself. Yes, excellent. Thanks, guys. So normally when you come to the first screen, which is the dashboard, you'll see some automatically identified trading patterns on top. We'll cover that in a minute. And then if you take your time, and I suggest that you do, if you have an account on one of the exchanges and you connect it, then you'll see your portfolio here as well. And that will also help you identify certain changes in sentiment and prices and so forth in your portfolio, so you can react to it quickly. And then if you don't, it's always good to keep a watch list. Now you can have both, but you know, for some people who are just getting started, may not have a portfolio, but you keep it a watch list, and that way, once again, you can keep track of certain interesting opportunities that you may have find. And then below that on the dashboard, we have the news, basically a scrolling news feed that we aggregate across thousands of different projects. And these are really news announcements from the project's managements themselves. This isn't necessarily what other traders or users are talking about. This is strictly what the management of these projects is basically releasing out to the public. Maybe they have some product announcements, partnership announcements, so forth. So this can be a really good source of some actionable catalyst news that can move the prices. And we see a lot of users really focus on this area. And so on the next section are the patterns. This is a very popular section. You probably have explored it yourself. And here basically this is an automated pattern recognition system where the system tries to find, based on historical data and historical patterns that we back tested. And we have some success statistics that we've published in our blog. We can share with you as well. Based on the past success or historical data and backtests, the system essentially tries to learn a certain pattern. And so here you can sort the patterns based on whether it's a breakout or emerging, based on different types, and so on and so forth. We'll cover that, and this will be a lesson all by itself, and how to use patterns. It's a little more advanced technique, so we'll start with some more basic things. But just to continue with the overview, we have a curated chart section. This is more of a in-house analyst team of technical analysts that basically analyzes the top 30, 35 altcoins and basically gives their assessment of what they see in the chart and how that particular situation could be traded. So here in the first one, as an example, is Pancake Swap. And here we say that the trends are mixed. It's an uptrend, short-term, downtrend, medium, neutral on the long-term basis. And there is a descending triangle pattern that's forming, and we're basically waiting for a breakout. Typically, a descending triangle pattern breaks out to the downside, a bearish breakout, but we do advise to just basically wait for a breakout and take action then. So I think you can learn a lot of the basics from the curated charts section. I advise that you do pay attention to it, and we basically give you some hints or tips of when to take action if a price breaks through a certain resistance and support level and so on. It really depends on the situation. But again, we keep it very basic, and we stick to the sort of the key indicators. And I think you can learn a lot from it, as well as I think it's sufficient in itself to actually generate some profit. I'll skip the signal summary for now. We'll get back to that later. But the next section is the screener. And the screener is just that. It basically allows you to screen, hold on, we got some hands raised. I don't want to keep just, here we go. Is the source of news trustable? It's trustable to the extent that it's coming from the project management. Each project management may have different agenda objectives. So, but I think it's the sources or the system is reliable. And what is the success rate of curated charts? Good question. That one I can't really tell you. I mean, it's not like we have back tested our curated charts. I mean, I use it, and it works for me. But I think with a 65-70%, I think success rate is what we're targeting, and I think we're achieving there. But I don't have any sort of hardcore data to back it with. All right, let's continue with the screener. With the screener, it allows you to basically create your own custom screen, how to find trading opportunities. At the beginning, you're going to probably stick to some basic ones, but over time, you're going to expand it and test and play around and see what comes out with, what you come out with. So, very simple could be, hey, I want all the coins that are in a strong uptrend on the short term, strong uptrend on the medium term, and even strong uptrend on the long-term basis. Okay, I add all those. I'm narrowed down to 130 items, and now I can review them further or continue to enhance and further refine my filter, which you can then later save. And let's see, let's do test filter. I save it, and I can then reuse it in the future here under the saved filters. Okay, and I can apply it next time as well. So this could save you a lot of time. And the next item on this next section is a watch list. So here, it's again pretty self-explanatory. It's a list of coins that you want to keep an eye on. Maybe it's your favorites. The way to add some coins to the watch list is you can either type in the symbol here. Let's say 1 inch. I used to like that. 1 inch. I can add it to the 1 inch exchange sort of aggregator of the dexes. I added that to my watch list just now, but also you can add it if you go back to the screener. You can very simply click on the star button, and that will be enough to add it to your watch list. Now, the other interesting, cool thing on this and all the other sections, I think more or less, is that you can quickly narrow the screen results to either your portfolio, which I don't have much in my portfolio at this point. Basically, first, of course, you have to make sure you get rid of all this criteria. So you can either narrow it down to your portfolio or narrow it down to the watch list. Okay. Now, the alert section, this is a key tool in your quiver in that it allows you to, again, stay on top of the market, make sure that you don't miss any opportunities, and we'll show you how to create these alerts and then also how to monitor the alert notifications. But this is the area you can do that in. The next one is the news and events. I already explained it, but a lot of people love sort of digging through this content and looking for either new listings that are coming up or any announcements of listings. So you can just type in the listing keyword, click on the set, and start reading. Or you can type in airdrops. There's another favorite, airdrops, same thing. So, it takes a little bit of work to read through some of these messages, but you may find some real gems if you do that work. Let's see, portfolio. Here we go. You got some questions as well. What difference, like versus, okay, that question I didn't understand. I'll try to answer it later. Let's, in the portfolio section, you can monitor your portfolio. Again, if you take the time to connect your exchange account through the APIs to this platform, then you will see even multiple exchange accounts in one view. Again, in my portfolio currently, I mostly have just cash or Tether and a little bit of Binance. But you can also see the open orders and past transaction history. And then under the trade, we have created sort of a unified and simple order entry form. I feel like the exchanges that are out there have a very busy, and they're all different in terms of the order entry and monitoring of the portfolio, but it's a very busy screen typically. And we've basically created a unified order entry and monitoring user interface that I think is very helpful. So you can sort of look at the charts, you can look at your balances of your portfolio and go ahead and initiate a trade from here. All right, so that's more or less, those are the main sections that we'll be utilizing in our process. Now let's go ahead and hit on some theory here. A quick question here. Can you set a read-only API connection to Binance for both future wallet and the spot wallet? You can definitely set a read-only API, and we recommend a read-only API. You mean maybe without the ability to execute? I'm not sure if Binance allows you to have literally just a read-only API, but we don't support the future wallet, just the spot wallet. Are there higher fees for using Alphins to trade, for instance? No, we don't charge any fees. We will literally just allow you to forward the order, the instructions for trade to the Binance exchange, and you only pay the Binance exchange fees. We don't have any fees on top of it that we would charge. That's not our model. All right, let's cover some theory, guys. Boring theory, but we'll make it a little more exciting. So what is technical analysis and what's it good for? Why would it work? So technical analysis is basically using historical price and volume data to ascertain certain future predictions. And the reason that it does work, at least specifically sort of the trend, the identification of a trend, is that trends have the tendency to continue. And so if you can find a certain trend on a long-term, medium, or short-term basis, there is a good probability that that trend may continue. And also, the reason it works is because the charts and the historical data essentially capture the struggle and the demand versus supply picture, the buyers versus seller, which one's more aggressive, and that gives you basically also an understanding of what the sentiment and the investor psychology is around a particular asset. And that is sometimes can be very well reflected in a pattern. Now, there's many situations where you just can't tell what's going on. There isn't a particular pattern, there isn't a particular trend, and we'll just have to avoid those situations. Or if it's a sideways trend, then we can trade the sideways channel by buying at the support and selling at the resistance, for example. But point being that technical analysis basically uses various indicators and patterns and tries to determine, again, the trend, the right place to enter and exit the trade, and also understand, again, certain levels that may have certain significance, because that's where a lot of the action happens. Certain levels is where the price seems to just reach a level and then retrace, and reach that level again and retrace. So clearly, at certain level, the sellers get very aggressive and they're taking profits. So seeing that in the chart and analyzing that can give us a lot of clues as to where to buy it, where to sell it, what to watch out for. Okay, and a very easy example would be looking at the patterns. I liked really trading ascending triangle, because the ascending triangle, what that tells me is that the price is basically has reached this horizontal level multiple times. The buyers have pushed the price up to a certain level, then the sellers have pushed it back, but then the buyers stepped in again more aggressively. And so it typically ascending triangle. So it reflects, first of all, it reflects the sentiment and the pulling and pushing between the buyers and the sellers, that indicates that there is a fair amount of interest and demand in owning this asset, and the buyers are sort of gradually pushing the price higher, not higher, but closer to that resistance level where we see the sellers. And so at some point, typically the ascending triangles result or resolve in a bullish breakout to the upside. I mentioned this now not to talk about ascending triangles so much, but really just to give you an example of how investor psychology and sentiment gets reflected in the price, which is visible in the charts at times, not always. And so typically, especially for beginners or intermediate traders as well, the first thing and the key thing is to establish the trend, which we typically use moving averages with to do so. And then the other indicators like RSI, MACD that we'll cover are typically used to time the entry and the exit. But the first thing really, and I will be pounding on this over and over again, is to identify the trend. So what are some of the popular indicators for technical analysis? The most popular indicators that I mentioned already, that most traders use, and I think it's because they do work, are moving averages. And there you have simple moving averages and exponential moving averages. And we'll cover the difference in the next lesson. We have the relative strength index, which typically shows you whether that asset has been overbought or oversold. And then the moving average, convergence, divergence, MACD, you've heard this indicator many times, I'm sure. It's an excellent trend and momentum indicator as well. But again, as I mentioned in the next paragraph, moving averages and MACD are often used to identify trends in the market, while the RSI, which is an oscillator, it oscillates between 0 and 100, typically is used to determine possibly entry or exit. And most of our charts, when you go to the screener and you select one of these assets, this detailed view pulls up on the right-hand side. And here, by default, those are the indicators that we have preset for users, meaning you have the chart, either line chart or candlestick chart, and then you have the 50-day moving average, 200-day moving average, you have the volume, you have the RSI and MACD. Those are the basic building blocks of any strategy, in my view. Question is, will you be adding Coinbase Exchange? Yes, we are, in the next month or so, in fact. All right. Another question, MACD is a lagging indicator. Is there a more real-time indicator before the price moves up and down? I mean, all the indicators are based on historical data, right? So there's nothing necessarily that will give you a clear future or path in the future. I mean, there's a lot of various indicators that people have created over time. I find these to be sort of the most helpful and easy to understand. So I don't know of any that, that are really sort of more real time than the ones that I mentioned. All right, so let's get back to the PowerPoint presentation, and I will send you these notes, by the way. You don't have to be writing anything down or copying these screens. I'll share that with you after the class. Now, we have to cover the charts. Now, I realize for some of you, this may be boring, but for others, this is important to cover and understand. So there's typically, so chart is, you know, obviously the most important tool, and it's really a starting point for analysis for a potential trade, right? Anytime we talk about an asset, we want to see what the price has done. We want to look at the chart, which way, you know, identify perhaps visually to see if it's trending up or down, add some indicators to the chart and so on. So the two most common chart types are line chart and candlestick chart. Now, line chart is really sort of basic. It's right. I mean, if you go back to this, I have the line chart here. It's basic. Let's see. Let's pull up a longer history, or even the 1 year history. And the black line is your daily line chart. Each one of these prices is the end of day price that is connected by a line. It's simple to understand. It doesn't have any noise in it, so it's good to. I like to look at it sort of like the first picture of the long-term time horizon, because it's easy then to identify sort of the long-term trend, right? And we can see it's steadily, with some peaks and valleys, the price is trending up. Clearly, Ethereum is an uptrend, and we say so based on our sort of rating of the trend up here. We have the ratings of the trend on the short-term, medium, and long-term basis, but even just visually, you can see that, and that's what the line chart is good for. But really, it obscures a lot of the action that happens during the day, and that's why everyone's adopted for trading the candlestick chart. And they call it the Japanese candlesticks because these charts originated in Japan all the way back in the mid 1600s, which is mind-blowing that they've been used for so long, for hundreds of years, initially to trade rice futures. And so you'll hear people talk about Japanese candlesticks, but basically it is the most popular chart for technical analysis because it includes more information about what happened during that time interval, a day or an hour, and so on. So let's go ahead and take a look at, you know, the way we enable you to switch to candlestick charts is right here. And we zoom to a shorter time horizon, you'll see that you've got these candles. The red candles obviously are on days when the price closed down, and the green candles are designating days when the price closed up. So already visually, you can, from the candlestick chart, see that it was, you know, maybe a series of positive up days, a series of negative down days. That already is a huge help in understanding the sentiment. You're also lining it up with the volumes, right? Was it a down day on the big volume, or was it a down day on the small volume? That also makes a difference. Did it break out and move up on the big green volume days, which would indicate a great level of demand? And so let's get back to a couple other things that I want to show you about the candles, which is that to understand what a candle is, and again, I apologize if this is boring for some of you, but it basically captures the data or the price movement within one simple candle. So here, as an example, we have, let's pretend this is the price of Ethereum, and we have basically 24 hours in one day on the low end of the axis, the x-axis. And on the left-hand side axis, we have the prices. And so let's hypothetically say that Ethereum opened at 3,781, and this would be on the UTC time zone. It opened here. Let me go ahead and use a pencil here. It opened here, then it kind of moved down, and that would have been, so, you know, in the candle, that price movement would be designated by the open here and move down here, okay, to what happened to be the low of the day. And then the price started, the buyers stepped in and the price started moving up, reached the high of the day, 3,804, right? And that would be seen as, okay, the price started moving up all the way to the high. And then the price kind of drifted down, bounced up a little bit, and closed the day at 3,792. And so the price would have done maybe this and closed here, okay? And so at the end of the day, all of this price action is captured by this simple candle. In that, what we have here is the open price, close price, the high and the low. The part of the candle that's between the open and the close is what they call the real body. The lines on the top of the real body is called the upper shadow, and the line connecting the body with the low price point is the lower shadow. And of course, if the price closed above the open, which it did today, because on this day the price opened at 3,781 and closed about $10 or $11 higher, then it's in the green color. If it had closed below that, it would be a red color. So this is the fascinating part about the candlestick. It captures so much more information than the line chart. In the line chart, all we would get is this price right here, the close, nothing else. All the other data, we wouldn't basically have any idea what happened to that price during that day. All we would have known and seen is that the price closed at 3,792. And so this is clearly a lot more informative, and some strategies really focus on these basically on these candlesticks or patterns, multiple candlesticks together. We'll look at some examples as well. And let me delete all this, the drawings. And so again, different price action forms different candles, and that alone could be a clue of what's happening in the marketplace between the buyers and the sellers. And so here's a quick quiz for you. Which one of these 4 different candlesticks do you think is more bullish? Someone said C, more bullish, not bearish. It's not really a trick question. I see some A's and D's, and that would be correct. It's not a very hard quiz, I know, but clearly the C, the candle that is in red, is not bullish because the price closed below the open to begin with, but also, as you notice, it shot up. It opened at 3,781. It shot up to 3,804, and then the sellers just pounded it even lower where it opened. This is a quite bearish price action candle. The B example here, what happened here is that we opened at 3,781. Maybe you went down and it went up. It just kind of was a lot of price action between these two lows and highs, but at the end of the day, really closed just very barely above where it opened at 3,785 for a gain of $4. More or less, nothing's changed, and it's an indication of some pause or indecision in the market. Okay, but now clearly this is just one candle. You always have to look at the context, but I just want to really drive. This is not, again, I don't want you to necessarily remember these candles and what they mean right now, but really just understand how important it is to learn and get used to the candlestick charts, because they tell a story, and they are far more informative than the line chart. And the A and D are certainly the bullish candles here, in that the A1, opened and it made a nice big body. It made a big gains, and it closed towards the high. So at the end of the interval, this could be a day, it could be a 4-hour interval, it could be a 1-hour interval. But at the end of the interval, the buyers were still in charge, and they pushed the price, and the price closed at the high end, very near the high for the day. And so the bulls were in charge. D, very similar, maybe even more bullish, in that the price opened higher and the sellers were really trying to push it down. There were some really aggressive, desperate sellers, but the buyer stepped in at the end of the day. In fact, they were aggressive enough to soak up all this demand, supply from the sellers, and the price closed at almost at the very high for the day. So again, just trying to drive the understanding that this is very informative. And there are, if we look at the next slide, there are now many different patterns: 1 candle patterns, 2 candle patterns, 3 candle patterns. And by the way, right now our platform does not have the candlestick sort of pattern recognition, but it's literally maybe 1 or 2 weeks away. So, so you will be able to screen the cryptocurrency data and altcoins to say, hey, show me all the altcoins that have recently had, some of these are really funny, like abandoned baby, a bullish abandoned baby, or show me those that have had an inverted hammer. Inverted hammers is, I'm sorry, what we saw in the prior slide was a hammer, which was this letter D, and that's a bullish formation, and also the spinning top, okay, but was the letter B. But anyway, point being is that there is a whole science and art around using multiple candles that form a certain pattern and tell a story, whether it's bullish or bearish. And certain trading strategies are based solely on this, and others utilize these indicators in addition to others, okay, in combination. And so our platform, again, will be able to identify these types of patterns. I would say it's in the very final stages, so in the next couple of weeks. And then I think the last important sort of theory, a concept that you have to determine, you have to learn, is which interval to use, which time interval to use. So when you look at our platform, and any sort of platform that has charting as well, there's time intervals. I'm sure you've noticed that in the past. So by default, when you go to the screener, for example, you're on a daily time interval right here. But you can go to lower time intervals. We have 5, 12-hour, 4-hour, 1-hour, and 15-minute time interval. Now, which one should you use? Well, it really depends, partly on your experience, but in great part on the amount of time you have to dedicate to trading. Hold on, question here. Do you have any plans to add more time frames, like weekly and monthly? Not at this point. And which time frames would that pattern recognition work for? All the time frames. Good questions. So it really depends on your level of experience, but really on the amount of time you have to monitor the position. So because the lower time frames, like the 15-minute one, the lowest that we have, things change quickly, right? Let's take a look. Let's go to the 15-minute time interval, Ethereum, okay? Okay, I mean, there is a lot of changes in just the buy and sell indicators from MACD alone. I mean, every one of these candles is a 15-minute interval, and so to trade on a 15-minute interval, you would be getting a lot of signals very frequently, and you'd have to be buying and selling and responding to these signals quite quickly. So I think a 15-minute interval is quite fast for most of us. And I would recommend beginners start. And frankly, I prefer the 1 hour, the 1 day interval, because I don't have the time to trade every day. To trade all day. I think I have 20-30 minutes of my time to dedicate to trading, and that amount of time is enough to kind of stay on top of my daily interval. Question here: does the 15-minute time frame update in real time? There's about 1 minute delay in prices. Great. And so getting back to this, the other very important point is that no matter what time frame or time interval you are in, the concepts are the same. How you identify the trend, how you use RSI, MACD indicators or other indicators, nothing changes. Really, what changes is that you'll have a lot more signals when you're on the lower time interval than on the higher time interval. Things change a lot more faster. And so I think it's very time consuming and demanding to trade on the lower time interval. And I think the other difference is that on the longer time interval, like daily, your positions will last longer. Your trades will last longer. These won't be hours. The trade that you put on will last several days, maybe even weeks. And so it takes less time to monitor and change and respond to the changes, but also the upside or the potential profit potential or downside potential on the daily time interval is greater per trade. Now, you will have fewer trades, but the profit potential is greater per trade. On the lower time frame, you'll have a lot more trades, but the profit potential will be smaller. Now, at the end of the day, you may make more money on the 15-minute interval, but I think it's just very time-consuming and demanding. So it's important to be aware which time interval you're on when you're using the platform, when you're analyzing things, because it makes a difference. For example, Ethereum right now on a daily time frame that I'm on, it's clearly the short-term, medium, and long-term trend is up, strong up, in fact, as we designated here. Now, you go to Ethereum on the 15-minute time interval, and that may not be the case. Let's take a look. All right, it's neutral on the short-term basis. It's up on the medium. It's up on the long-term, not strong up. Let's go to an hourly time interval, and let's check the situation there for Ethereum. Okay, it's up on the short, medium term, and neutral on the long term. Point is, the indicators and the trends will not line up across time intervals, because while on the daily, Ethereum is trending up, within that day on an hourly, you'll have ups and downs, swings, and so the moving averages will tell you something completely different. So it's important to typically stick to one time interval and trade in it and really get comfortable with it, particularly the higher one, and maybe then go down the time interval over time. Now, what traders do, and we will sometimes do as well, is trade on the higher time interval, but go down when we want to enter a trade. Okay, so maybe I like Ethereum on the long-term basis, but I want to make sure my entry is appropriate, and that's when I will sort of take it down a notch or take it down a time interval and say, okay, I love it here on the daily, but what's it doing on an hourly time interval? Is it also in an uptrend, or is there MACD bullish crossover? And that may help me with the entry of the trade, but I will still continue to then live in that daily time interval. I hope that's clear. Let's check some questions. Would you use the 1 hour time frame to look at trades for the 15-minute? All right, not sure if I understand that. Great. So that's the time interval selection, and that's kind of the end of the theory. Let's check our time here. Okay, great. We have time for some Q&A, but I also wanted to, and I always want every lesson to close it out with a trade. So let's see what we can find today. Checking the action here today, kind of a flattish. Bitcoin is, you know, plus or minus where it was. Ethereum, nothing stands out, at least on the first page. I said that we'd get back to the signal summary. So let's check out the signal summary here. Signal summary is really a summary of various indicators or moving average crossovers. And we have some presets, and these can be really good building blocks for your strategies. But also, as you create custom filters, your filters will also appear here, and these will then you know, enable you to quickly jump to that a strategy or filter. So as you remember, I created a test filter earlier in the lesson, and now it appears in my signal summary, and it says that, you know, there's about 130 altcoins that satisfy that filter that I created, which was coins that are in an uptrend, strong uptrend, across short-term, medium, and long-term basis, if I remember that filter correctly. And then you've got other strategies here. You know, great place to start some of the screeners that you can later adjust as well. Let's go ahead and look at, for example, these strong uptrend, 130 coins. Let's see what they are. Let's see if we can find something interesting here. Bitcoin, Ethereum, they're all in the strong uptrend. By the way, you can look at the charts here. So we have some tabs here. You can look at the performance. Obviously, self-explanatory performance of these coins in the last day, week, month, 3 months. Lots of green, makes me happy. Trend, oscillators, but you can also add columns to the individual tabs. Okay, let's just say I want to have the short-term and medium-term and long-term trend right here on the first page. Okay, well, this is our filter, so clearly no surprise that we see all these coins with a strong uptrend. So let's look at Solana. What's going on in Solana? Let's add the candlestick. Let's add the my favorite MACD and RSI. Okay, Solana, and let's step back a bit, 6-month chart. So it made a huge move, obviously, here, and now it's been consolidating. It really almost is consolidating in a triangle. I take my pencil here. It's consolidating in a triangle right here. That would be helpful if I had maybe a line on that. That would be helpful. Yep. Here we go. Right. So what does that mean? Well, it's in an uptrend across the board, but it is consolidating after, you know, making this big, huge move. The buyers and sellers are sort of playing tug of war, and symmetrical triangles like this one are typically indications of indecisions in the marketplace. So the buyers and the sellers are about the same strength, and here we're reaching a pinnacle right here. Oops. We're reaching a pinnacle of that triangle, so we're going to see a breakout very soon that will be telling which way the price is going to likely go next. Typically in an uptrend, the breakout is to the upside, but we would wait for the breakout. So here at the moment, I wouldn't place a trade. Maybe I would place some alerts to alert me of a particular breakout. So the way to do that, let's keep going and let's see if we find something interesting to trade. So let's see, dot. And by the way, if you click on the curated charts section here, some of these larger cap altcoins, we have curated charts. So you can also check what our internal analyst team is thinking on that particular opportunity. But this is the Polkadot the curated chart that also shows you some important support and resistance levels. And here, what we see here is that there was a big green candle a few days ago and a big volume that really shows conviction from buyers. And it broke through an important, at the time, it was a resistance level, but once you break through a resistance level, it becomes a support level. It's a concept known as polarity, and we'll cover that in the future lessons. And again, I'm throwing a lot of stuff at you here, but we'll break it down in the future lessons. So if you're feeling overwhelmed, don't worry, we'll cover all these in future lessons. But in any case, so the resistance has become support, and now the price is kind of pulled back a little bit to that level. But I like this situation. I think the $40 level will be a good support now. Let's see. Let's look at the live action here. Yep. Let's zoom in a little bit. Right. Okay, here's the big breakout. Here's the big volume here. The MACD indicator is indicating buy. Now we've got a pullback. It could be an opportunity here to get involved around the $40 level. Let's look at the bigger picture as well. You can see here the $40 level in the past was really a critical level. Even in the spring of this year, the price was trying to break through it multiple times. And then once it did, it became support. And so that level, if it gets tested as it is right now and bounces off the 40 is when I would probably get involved. Let's see what else is here on the list. All right. How about another quick, just so you see how the power of the screener. So I'm going to open a new coin sheet. So you can open multiple coin sheets, by the way, on top here. Okay, so you don't have to close what you've done, the work you have done. Hold on, we got some questions here. I see. When charting other coins, does the platform automatically create support and resistance level? That's not so, no. If so, how? Okay. I saw the dot in pattern filter that estimated up to 44 days later, the pattern was indicating that it can touch $70. How can you estimate the time for the patterns? So if we go to the patterns, the patterns will have an estimated time that it could take to achieve that price forecast. That basically depends on how long did it take for the pattern to form. So it's typically, the forecast is for the same length of time that it took for the pattern to form. Let's get back to the screener and find some MACD crossovers. And this is actually a new feature that we added literally just a few days ago, and we will announce it to the world soon. For those who haven't noticed it, but previously you were only able to show or to find altcoins that had a MACD, bullish MACD crossover, but it didn't matter whether it happened yesterday or 2 weeks ago. And clearly a lot of the users were asking, well, I want to see the fresh crossovers because those are the great signals to get involved perhaps. So what we have done is it created those crossover options on and analytics. And so if you go to the screener, oscillators and MACD and select the crossed above, MACD has crossed above the MACD signal line. That's the buy and sell flag that you see on the MACD indicator that we have. And here you can select whether you want that crossover to have been in the last 5 intervals, or in this case days, because I'm on a daily interval, or 4 or 3, right? So how fresh do you want it to be? I'm going to go with 5. Add that filter. I typically also add a market cap filter so that I don't get any really tiny garbage. But for some of you, maybe the tiny garbage is what you want. In any case, so this is the result of a filter that shows coins that have had a recent MACD bullish crossover. So let's look at the charts, the grid. And as you can see below here, all of these have had a recent buy signal on the MACD indicator alone. Now, that alone is typically not enough to get involved, but it's a good starting point. It shows you there's a momentum building, a recent momentum building in this case. And then we examine the situations. It's great if it happens around certain support level. It's great if it perhaps is breaking out to new highs and so on. So we could either visually or through the screener continue to fine tune that filter. Looking at cello here, let's take a look at the bigger picture. Oops. I have this on top here that I'm trying to get rid of. All right. And candlestick chart. Let's get rid of the, all right. So here, let's get rid of the MACD for now. And RSI as well. Okay. So what do we have here? We have a recent buy signal from MACD. If I bring it back here, it's down here. Okay. Momentum is fresh. That's good. Positive bullish momentum. And also you may discern that there's the $6 level appears to have been a resistance level. In the past, the price has in the past sort of broken through this resistance in the past. And again, once you break through it, it becomes a support level. And so I do think that this break through the resistance is a legitimate break. It was decent volume here. If you look at the green volume bars, were increasing, in fact, and while the volume on the down days was lower. Okay, and you can actually see that if we add the indicator OBV, on balance volume, that could show us the growing trend in buyers. Okay, it's not that visible perhaps, but we can certainly see it here in the volume. And so that tells me that the buyers are stepping in, they're getting more aggressive. As you can see, the volume bars were growing. And now we got a MACD signal bullish indicator. This is good enough for me with upside to about $7, maybe even $8 over the next few days. My downside is probably to the $4 level, which is a 200-day moving average, which also serves as a dynamic support level. Okay, so just to give you a little bit of insight into my way of thinking and how to use the tool for simple trade setups. Okay, so again, I basically search for fresh MACD crossovers for market caps that are above 110 million or so, and that was my starting point. So let's go ahead and put that trade on. So that I would go to the trade tab. In the meantime, I see some questions here. Sorry, but which is fresher for the crossover, 5 or 1? 1 is the fresher. I mean, 1 would mean that the crossover happened literally yesterday or in the prior 1 interval. If you're on the hourly interval, that would mean past hour. So the lower number means it's fresher. The 5 means it happened in the last 5 days. I hope you can explain signals like this MACD crossover in the future lessons. Absolutely, yes. Yes, absolutely. I know we're covering a lot of ground here, but we'll cover it all in the greater detail in the future lessons. Just bear with me. And so here, what were we? Oh yeah, we wanted to trade cello or CELO. I'm not sure how to pronounce it. Here it is. So I'll trade on Binance. The Binance is the only one that I have connected right now, but you could connect a few others. And so CELO or Cello is indeed traded on the Binance exchange. I can look at the chart here again, just to make sure I didn't miss anything. I can go to a lower time frame here, right, and see, okay, what's going on in the lower time frame. It's actually on the lower 15-minute time frame. It's trading. It's trending down. Going from a daily to 15 minutes probably too far out, but on the daily, on the 1 hour time frame, it's kind of a mix. So you know, my timing is not perfect perhaps here, but just for the sake of demonstrating the platform, I'm going to go ahead now look at the order book. So these are the prices right now that the market participants are either willing to buy it at or sell it at. So the bid-ask spread is what we see here on top of the book. So here, this part is called the top of the book. This is the price you can trade at right now. This market depth later is, you know, could be valuable, and it's basically illustrated here in this green and red chart on the bottom. But for you, top of the book is where you're gonna basically right now be able to trade at. Important part here is the spread between bid and ask is tight. Means there's a lot of liquidity and you are getting a fair price. If the spread was wide, you know, when you buy today and sell it the next day, you're gonna lose a lot in the process. So seeing a tight bid-ask spread is very critical, very helpful to see that there's a decent liquidity here for us. And how big of a trade am I gonna place right now? I'll work with $1,000 sort of trade sizes. We'll explain as well the concept of risk management and how you should calculate your trade size based on the expected sort of risk-reward ratio. Again, another lesson on our lesson plan. But let's go ahead and say, okay, I want to buy it market price. Typically, we probably use actually limit buy. And let's see, the best price right now, $6 and change. I'll say, okay, I'm willing to pay up to $6.10, and I want to buy $1,000 worth. So that would be what, 150 or so, 160, 170. Okay, 170 units of cello that I want to buy, up to $6.10. Let's send the trade. And nothing in my open orders looks like, and even here the balances have updated to show you that you already actually, that I have bought successfully, bought 170, not quite 170 because of the fees, units of cello, and you can see that in your balances as well, that I now own it at that price. Great. Well, let's hope this works out for us. So this really wraps it up for me. Let's take a few more questions here. All right. What happens if we use multiple exchanges when we log in? Do we have to two-factor authenticate each time we log in for all exchanges? No. You'll have to just two-factor authenticate once to get into our platform, and you'll have access to all the exchange accounts that you have connected to. You will not have to repeat that process. Right. Great. Yeah, this is all spot trading. We don't have margin enabled. A good question. Maybe something we should consider in the future. But for now, just the spot trading here. All right, guys. Well, hopefully you liked so far what we saw. Again, for some of you, perhaps certain sections were boring. Thank you for bearing with me. Happy to take answers also offline. So please email me at invest@alfins.com, and I'll be sure to respond to all of your questions. And I'll see you next Thursday, or this Thursday at the same time. And also, the replay of this session will be available shortly after the live session is over. So again, thanks everyone. Have a fantastic day and good luck trading. Thanks for the feedback, gents and ladies. Bye-bye.